Welcome to Breaking News to Trading Moves. I'm your host, and I'm here with our resident market expert.
It's good to be here.
So we're looking at a pretty specific headline today, but one that has some broader implications. It involves Novavax and Pfizer.
That's right. It's a licensing agreement around an adjuvant called Matrix M.
An adjuvant. Okay, we'll get into what that is, but first, let's just lay out the headline itself.
The core of it is this. Novavax signed a non-exclusive deal with Pfizer. It gives Pfizer the rights to use the Matrix M adjuvant in, I believe, up to 2 of their vaccine programs.
2 specific programs for infectious diseases.
Okay.
So our mission here is to look at the terms of that deal, figure out who the winners and losers are, and, what this means for the companies involved.
Exactly.
Now, just a quick note before we start. When we mention stock tickers, we'll read them letter by letter, like NVAX. And you won't hear us say the dollar signs you might see in our notes.
Got it.
All right, so let's get into the deal structure. The first thing that jumps out to me is that word, non-exclusive.
Yeah, that's a big one.
Usually when a giant like Pfizer, PFE, licenses a technology, they want to lock it down completely, right? They want it all for themselves.
100%. The standard playbook is you buy an asset to use it, but also to prevent your competitors from using it. Exclusivity is the name of the game.
But not here. So Novavax can still use Matrix M for its own stuff.
They can use it for their own pipeline, and this is the key part, they can potentially license it to other companies down the road.
So it's less like selling a car,
Yeah.
more like, I don't know, selling a software license.
You're
You
right.
sell one to Pfizer, one to someone else.
That's a great analogy. It really is. It turns Matrix M from a single product into a platform technology that can be monetized over and over again.
And Pfizer was okay with that. What does that tell you?
Well, a couple of things. It could mean they needed this specific technology badly enough that they were willing to give up on exclusivity. Or, maybe the price for full exclusivity was just way too high and this was the compromise.
A tool for the toolbox, not the whole workshop.
That's a good way to put it. Yeah.
And the deal specifies up to 2 infectious disease areas. Do we have any idea what those are?
No, not yet. They are completely undisclosed at this point, and that's a really important detail to watch for later. But the limit itself is crucial.
How so?
It means Pfizer can't just take this and start experimenting in, say, cancer vaccines or something. It's very narrowly defined.
Okay, so let's talk about who does what. The division of labor in this partnership.
It's a pretty clear split. Pfizer is doing all the heavy lifting. They're running the clinical trials. They're handling the global manufacturing of the final vaccine, the marketing, the sales, all of it.
They're taking the product from the lab to the pharmacy shelf.
Exactly. And Novavax's role is much simpler.
They just supply the magic ingredient.
They supply the Matrix M. That's it. They're the ingredient provider.
Okay, let's talk about the money, because that's always the bottom line. I see an upfront payment of $30 million.
That's correct.
Now, I have to be the skeptic here. $30 million. For Pfizer, that's nothing. It's a rounding error on their balance sheet. Is that really a headline number?
If you're looking at it in a vacuum, no, it's not a huge number for a company of Pfizer's size. But you have to think about it from Novavax's perspective. They've been in a position where cash is critical.
So this is an immediate injection of liquidity.
It's immediate non-dilutive capital, and that's a key phrase.
Meaning they didn't have to issue new stock and water down the value for existing shareholders.
Precisely. They got cash from a partner, not from the market. But I think the bigger point is that this $30 million is almost like an access fee. It's Pfizer paying to get in the door and proving to the world that this technology is valuable.
The validation is worth more than the cash itself.
In the long run, absolutely. Then you get to the bigger numbers, the ones that look really good in a press release.
Well, milestones. I see up to $500 million.
Up to, and eligible for, is the key phrase there.
Right, so this isn't guaranteed money.
Not at all. In the industry, we call them biobucks. They're heavily weighted towards the back end. You might get a small payment when a phase 1 trial starts, a bigger one for phase 3. The largest payment comes if and when the drug actually gets approved by the FDA.
So we can't just plug $500 million into our models for Novavax next year.
Absolutely not. It's all probability weighted. But the size of that number, $500 million, does tell us something.
What's that?
You don't put that kind of incentive on the table for a small niche product. It suggests that whatever Pfizer is targeting, they think it has blockbuster potential.
Okay, and then the third piece of the financial puzzle, the royalties.
Tiered, high, mid, single-digit royalties on net sales.
Break that down for us. Why are royalties so powerful?
Because they are almost 100% pure profit. Once the product is on the market, Novavax doesn't have to spend a dime on a sales force, on marketing, on distribution. Pfizer covers all of that. Novavax just gets a check in the mail for every single vial that's sold.
So a dollar of royalty revenue is worth way more to the bottom line than a dollar from selling your own product.
Orders of magnitude more. It's incredibly high-quality revenue.
This all seems to feed into this idea of platform monetization, which is a term we hear a lot. This deal feels like a textbook case.
It really is. The old biotech model was binary. You pour all your money into one drug, you run the trials, and if it fails, the whole company might go under.
High risk, high reward.
Very. The platform model is different. You're not just selling one drug, you're selling a technology, the adjuvant in this case, that can make lots of different drugs better. You license it out.
You're not the soldier in the fight. You're the one selling the weapons to all the armies.
Or the Intel Inside model. Intel doesn't make the whole computer, they make the critical chip inside that makes it run. Novavax is positioning Matrix M as that critical component.
And that creates a more diversified, steadier stream of potential income.
Exactly. Much higher quality, much less risky than betting the farm on a single product launch.
So let's get into the why of it all. Why does Pfizer, with its massive R&D budget, need to go outside for a piece of technology like this? What is Adjuvant, really?
Okay, so think of it this way. A vaccine works by showing your immune system a piece of a virus called an antigen.
Like a most wanted poster.
Perfect analogy. But sometimes just showing the immune system that poster isn't enough. It's just a protein floating by, and the immune system might just, ignore it.
It doesn't get the message.
Right. The adjuvant is the chemical alarm bell. It's the signal that gets injected alongside the poster that shouts at the immune system and says, hey, wake up. Pay attention to this thing. It's dangerous.
So it boosts the immune response.
It makes the response stronger, and critically, it makes it last longer. It improves the durability. In a post-pandemic world, nobody is impressed by a vaccine that only works for a few months. Everyone is chasing that long-lasting, durable protection.
And the thinking is that Matrix M is a better alarm bell than what Pfizer already has.
The data suggests it is. Matrix M is saponin-based, which means it comes from the bark of a tree, actually. It forms these unique cage-like structures. This isn't just a simple irritant like the older aluminum-based adjuvant.
Aluminum is the classic one, right?
It is, and aluminum is very good at stimulating one part of the immune system, the antibodies, but it's not as good at firing up the other part, the T cells, which are crucial for killing cells that are already infected.
And Matrix M does both.
It seems to generate a more balanced response, recruiting both antibodies and a strong T-cell response. That's the sophistication that Pfizer is paying for here. It's a more advanced immune signal.
You mentioned aluminum. There's also a bit of a, let's call it a public perception issue there, isn't there?
There is. Scientifically, aluminum adjuvants have been used for decades and have a very strong safety profile, but, there's a vocal segment of the public that is very skeptical of them.
It creates a narrative risk.
That's the perfect term for it. If you're Pfizer and you're about to spend $1 billion developing a new vaccine, you want the smoothest path to market possible. If you can use a newer plant-based adjuvant that completely sidesteps that whole aluminum debate, that's a win.
It's a scientific choice, but it's also a marketing and public relations choice.
Yeah, it absolutely is.
Okay, this is a great foundation. Let's pivot to segment 2 and talk about the clear winners here, the direct beneficiaries of the deal. We have to start with Novavax, ticker NVAX.
Yeah, they're the obvious number one winner. The biggest win for them, I think, is the validation.
The seal of approval from Big Pharma.
You couldn't ask for a better one. Having a company like Pfizer essentially endorse your core technology is huge. It silences a lot of the critics.
And the cash is nice, too.
Of course. The $30 million helps the balance sheet immediately. But the real strategic win is what we talked about, the optionality. They've created this potential for a massive, high-margin revenue stream down the road, and Pfizer's the one paying for all the risky development work to get there.
Novavax just has to sit back and supply the adjuvant.
They hold a call option on a potential blockbuster, and they got paid to take it.
Okay, what about Pfizer, ticker PFE? How is this a win for them?
For Pfizer, it's about efficiency and gaining a competitive edge. They're basically outsourcing a piece of R&D.
So they get access to this potentially superior technology without having to buy the entire Novavax company.
Exactly. It's a very low-risk, capital-efficient way to upgrade their vaccine toolkit. If the two programs they use this in are successful, they could have a best-in-class product. If they fail, well, they're only out the development costs and a relatively small upfront fee.
Makes sense. Okay, let's zoom out a bit. Segment 3. The sector read-throughs. Who else benefits when a deal like this happens? You mentioned other companies with adjuvants.
Right, the whole space gets a lift. The first name that comes to mind is Dynavax Technologies.
Ticker DVAX.
Dynavax has its own proprietary adjuvant, CpG 1018. It's a different technology chemically, but the business model is identical. It's a premium ingredient that makes vaccines work better.
So when the market sees Pfizer paying up for Novavax's ingredient,
It causes investors to look at Dynavax and say, maybe their ingredient is undervalued too. The whole asset class gets a re-rating. It proves you can make money just from the adjuvant, not only from the final vaccine.
and what about the big players like GSK?
Ticker GSK. For them, this is pure validation of a strategy they've been following for years. Their shingles vaccine, Shingrix, is so effective largely because of their own advanced adjuvant, AS01.
So this deal just confirms that the entire industry is moving in the direction they pioneered.
Right. It reinforces the idea that the future of vaccines lies in these more complex, high-performance formulations. It tells the world that GSK was right.
I want to touch on the picks and shovels play here, the suppliers. It's an angle that often gets overlooked.
It's so important. When we talk about picks and shovels, we're talking about the companies that sell the equipment and consumables for biotech manufacturing.
Companies like Thermo Fisher Scientific
Ticker TMO.
and Danaher.
Ticker GHR.
Why would a deal for just 2 vaccine programs move the needle for giants like them?
Because a complex adjuvant like Matrix M is not easy to manufacture. You're extracting a specific molecule from tree bark. You have to purify it. It's a complicated process.
And that process requires specialized equipment.
It requires chromatography systems, specialized filters, single-use bags, and a whole battery of analytical tools to ensure quality control. And who sells all of that?
Thermo Fisher and Danaher.
And a lot of it is consumable. It's the classic razor and blade model. Every time Pfizer runs a new manufacturing batch for a clinical trial, they use up more filters, more resins, they have to reorder. So this deal directly signals an increase in R&D spending that flows right down to them.
So they're like an index fund for biotech activity.
Yeah,
As long as someone's doing research, they're making sales.
that's the perfect way to describe it.
Okay, let's flip the coin and talk about the other side. Segment 4. The losers, or at least the companies that might face some new pressure from this, the elephant in the room has to be the mRNA platforms.
Yeah, it's impossible not to talk about them. This is a bit of a sentiment headwind for the mRNA players.
We're talking about Moderna, ticker mRNA.
And BioNTech, ticker BNTX.
During the pandemic, the story was simple. mRNA is the future. It's better than everything else. Does this deal poke a hole in that narrative?
It complicates it, for sure. It suggests that the future isn't a monopoly for one technology, but a multi-platform world. mRNA's strength is its incredible speed. You can go from a sequence to a vaccine candidate in record time. But traditional protein-based vaccines, especially when paired with a powerful adjuvant like Matrix M, can sometimes have advantages in other areas, like tolerability, fewer side effects like fever and chills.
So Pfizer, by investing in this non-mRNA approach, is basically hedging their bets.
They're acknowledging that mRNA might not be the single best solution for every single virus. And for an investor who was betting that mRNA would capture 100% of the future vaccine market, that's a problem.
It's not a fundamental collapse for Moderna, but it's a rotation of risk. Capital might flow from the pure-play mRNA names to companies with a more diversified approach.
It's a relative underperformance story. Exactly.
What about the smaller biotechs, the
Right.
ones without a big partnership like this?
This is where the market can be pretty brutal. We're in a market environment that is clearly rewarding this platform licensing model.
You mean companies like Inovio Pharmaceuticals?
Ticker INO, yeah, or Vir Biotechnology.
Ticker VIR.
Many of these smaller companies are entirely dependent on their own clinical trials. Their fate rests on a single pass or fail data readout. That's a very high-risk proposition.
And Novavax just showed there's another way, a lower-risk path through royalties.
Exactly. So if you're an investor choosing where to put your money in a nervous market, you're probably going to favor the company that has a validated platform and a potential royalty stream over the one facing a binary clinical event. The riskier names can see capital flow out of them.
And finally, you mentioned the aluminum adjuvant basket. The incumbents.
Right. Companies like Merck & Co.
Ticker MRK.
And Johnson & Johnson.
Ticker JNJ.
This goes back to that narrative risk. These companies have huge, successful vaccine franchises that were built on older, aluminum-based adjuvant technology.
So when the market gets excited about a new, modern, saponin-based adjuvant, their existing portfolios can start to look a little dated.
They can look less premium. It doesn't mean the vaccine stopped working overnight, but it creates a perception issue. It's like you're selling a reliable gasoline-powered car right when everyone is getting excited about the new electric models. The buzz and the valuation multiple tends to follow the new technology.
So it puts pressure on them to innovate within their own pipelines to keep pace.
It does, which of course costs a lot of time and money.
This has been a great breakdown. Let's look to the future. Segment 5. What to watch next? What is the very next thing we should be looking for?
The number one catalyst is target disclosure. We need to know what those 2 infectious disease areas are.
Because that tells us who Pfizer is directly competing against.
Precisely. If they say they're going after a new flu vaccine, then a whole set of companies are suddenly on notice. If they say they're targeting, chikungunya virus, that's a completely different competitive landscape. Until we know the targets, the impact is strategic, not tactical.
Okay, what else?
The financial timing. The press release says the $30 million upfront payment is scheduled for Q1 2026.
That's a bit of a ways out.
It is, and the delay is interesting. It probably has to do with the tech transfer process. It takes time for Novavax to teach Pfizer's manufacturing teams how to properly produce and handle Matrix M. The payment is likely tied to the successful completion of that transfer.
So we watch for the cash to actually hit the books.
Yeah.
And then any news on the milestones.
Any press release that says Pfizer initiates phase 1 trial or something similar, that would likely be the trigger for the first milestone payment from that $500 million pot.
And last, any hint of more deals.
Yes. Novavax management has already been saying that since the Pfizer deal was announced, interest from other potential partners has picked up.
The fear of missing out.
It's a real thing in pharma business development. When the market leader makes a move, every other company's strategy team has to ask themselves, should we be doing something similar? Do we need our own advanced adjuvant to compete?
So this first deal with Pfizer could increase the odds of a second or third deal with someone else.
The probability definitely goes up. This could be the first domino to fall for Novavax's licensing strategy.
It seems like this single deal really tells a much bigger story about where the vaccine industry is heading.
It absolutely does. It highlights that shift from just trying to sell a final product to selling the critical enabling technologies.
And that's the thought I want to leave our listeners with. The idea of selling the ingredients versus the finished meal. In a gold rush, selling the picks and shovels is often the best business. Here, Novavax is trying to sell the special chemical that helps everyone else find their gold.
If you can prove your technology is that critical ingredient, it can be a fantastic high-margin business.
The market is certainly watching to see if they're right.
Time will tell.
All right, before we wrap up, we have to give our standard disclaimer. This discussion is for informational purposes only. This is not financial advice or buy or sell recommendations. This is purely the opinion of the author.
Please always do your own research and consult with a qualified financial professional.
Thanks for listening to Breaking News to Trading Moves. We'll keep watching the tape.
Take